Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Bayojan, currency analyst, and today is Monday, August 27th, 2018. The pairs we're going to be looking at for this week are the dollar yen, the Aussie dollar, and the dollar Looney. We're going to start first with dollar yen. We can see here in the daily chart that the near-term bias is fairly neutral, with the risk being to the upside. We can see the RSI is pretty much flat around the 50 level, while if you look at the stochastic, it still points to some upside momentum. We can see the percentage K line already has crossed into overbought territory, but we could soon see a bearish crossover as the percentage D line is fast approaching it. At the moment, immediate support is coming from both the 20 and the 50-day moving averages near today's intraday low around the 111 level. Prices have been hovering around the 23.6% Fibonacci retracement of the up leg from 104.62 to 213.16 for the past months or so. If we do see a stronger upside momentum, prices might be able to break above the nearest resistance level around 111.50. A break above that level would open the way towards 112.15. That was a top from back in July, and that would also open the way towards the 6 months high of 113.16 also from July. To the downside, if we do see prices breaching the 50-day moving average, the next support will likely come from around 110.70. That's a previous congestion area. Below that, we have the 38.2% Fibonacci at around 109.90. That's also near the 200-day moving average and also near the near-term descending trend line. If we do see prices breaking below that downwards trend line, we could then see prices targeting the 50% Fibonacci retracement around 108.90. In the medium term, though, we still have that uptrend pretty much intact, though. The fact that prices have been consolidating since July, we could see the medium-term picture soon turning to neutral, and we can already see the 50-day moving average starting to flatline a little bit. If we now move on to the Australian dollar versus the US dollar, we can see here that the near-term bias is also rather neutral, with a risk being mainly to the downside. RSI is flat just below the 50 neutral level. At the moment, prices are confined between the 23.6% and the 38.2% Fibonacci retracement of the up leg from 0.72 to 0.7381. So the immediate support is around 0.7310. That's near the 38.2% Fibonacci. That's been a previous key support level. If you do see prices dropping below that support, it would open the way towards that 1.5 year low of 0.7202 that we saw back in earlier in August, and then below that the next key support would likely come from the 161.8% Fibonacci extension around 0.7090. On the other hand, if we do see a fresh upwards attempt, prices would first have to break above immediate resistance at 0.7345. That's also the 23.6% Fibonacci. Above that, we have a key resistance area between the 50-day moving average and that top from earlier in August around 0.7381. If prices manage to break above that area, it would soon meet another key resistance barrier, which is that medium-term descending trend line. If prices were to break above that trend line, it would strengthen the upside momentum, will shift the focus to the upside, and then the next resistance above that would come from around 0.7450. However, for the time being, the medium-term outlook is still pretty much bearish. We can see prices have been drifting downwards since the start of the year, and in the process, they broke below that longer-term ascending trend line, signaling a major shift in the longer-term picture to more bearish one. A final pair for the day is the dollar Looney. At the moment, the near-term bias is lacking any direction. RSI is slightly tilting upwards to just at the 50 level. Prices at the moment do have support though from that medium-term ascending trend line. And to the upside, the immediate resistance is the 10-count stand line of the Ichimoku cloud around 1.3080. A break above that the resistance level would take prices deeper into the cloud, deeper into neutral territory, and towards the 50-day moving average around 1.3126 at the moment. Above that, we would likely see resistance around 1.3170. A break above 1.3170 would shift the near-term bias to more a positive one, a much stronger positive one, and then the next resistance would come from 1.3285, which was a high from back in July, and then we could then see prices attempting to breach that 1-year high 1.3385 that we saw back in June. To the downside, if we do see prices breaking below that trend line, it could signal a shift to more bearish outlook in the medium term. At the moment, the medium term picture is still holding pretty much as a bullish, or just about. We can see prices have been consolidating since late June. Support below that trend line should come around 1.2970. Below that, we have another congestion level around 1.2915, and then we've got the 200-day moving average just above another previous support level around 1.2820. That's it from me. Thank you very much for watching, and have a great day.